Imagine waking up at 60 years old, walking out to your driveway and looking at a brand new luxury car that is completely paid for, or looking at a bank account with hundreds of thousands of dollars in it, all because your 18-year-old self decided to sacrifice just one fast food meal or one streaming subscription every single month. It sounds like a fantasy or some kind of internet scam, but it is actually just cold, hard, inescapable math. When you are 18 years old, you feel like you have all the time in the world, but you also feel like you have absolutely no money. You look at the stock market, you look at real estate, you look at day trading, and everything seems like a playground reserved exclusively for the rich. You see guys on TikTok and Instagram flashing rented Lamborghinis, screaming about options trading, crypto pumps, and massive leverage, telling you that if you aren't risking thousands of dollars a day, you are losing. But the dirty little secret of the financial world is that those guys almost always go broke. Imagine waking up at 60 years old, walking out to your driveway and looking at a brand new luxury car that is completely paid for, or looking at a bank account with hundreds of thousands of dollars in it, all because your 18-year-old self decided to sacrifice just one fast food meal or one streaming subscription every single month. It sounds like a fantasy or some kind of internet scam, but it is actually just cold, hard, inescapable math. When you are 18 years old, you feel like you have all the time in the world, but you also feel like you have absolutely no money. You look at the stock market, you look at real estate, you look at day trading, and everything seems like a playground reserved exclusively for the rich. You see guys on TikTok and Instagram flashing rented Lamborghinis, screaming about options trading, crypto pumps, and massive leverage, telling you that if you aren't risking thousands of dollars a day, you are losing. But the dirty little secret of the financial world is that those guys almost always go broke, while the quiet kid who quietly automates a tiny $50 monthly investment becomes a millionaire without ever looking at a single stock chart. This is the ultimate guide to building life-changing wealth from absolute scratch, designed specifically for the US market, using the single greatest financial superpower that exists on this planet: time. Most people completely misunderstand what wealth building actually is. They think it requires a massive salary, a rich family, or a stroke of insane luck on a speculative tech stock. But the reality is that the financial system in the United States is structurally designed to reward consistency over intensity. If you can scrape together just $50 every single month, which breaks down to less than $2 a day, you can exploit the exact same wealth systems used by Wall Street executives, hedge funds, and generational billionaires. Think about your daily life right now. $2 a day is a single coffee. It is an energy drink at a gas station. It is a couple of songs on an app. It is a cheap subscription you forgot to cancel 3 months ago. It is an amount of money that completely vanishes from your life without you ever noticing it. But when you redirect that invisible, vanishing money into the right financial vehicles, it undergoes a radical transformation. The magic engine behind this transformation is a concept called compound interest, which Albert Einstein famously called the eighth wonder of the world. Compound interest is not just earning interest on your money, it is earning interest on the interest that your money already earned. It creates a snowball effect that starts so incredibly slow that you think it isn't working at all, but by the time it reaches the bottom of the hill, it becomes an absolutely unstoppable avalanche of cash. When you invest your first $50 at age 18, that $50 goes to work for you. It buys a tiny share of the largest, most profitable companies in the United States. Those companies work hard, sell products, innovate, expand globally, and generate profits. A portion of those profits gets reinvested into the companies, causing their value to rise, and another portion gets handed back to you as cash dividends. Now, instead of taking that cash and buying a soda, you automatically reinvest it to buy even more tiny shares of those companies. The next month, you add another $50. Now you have your original money, your new money, the growth from the first month, and the dividends all working simultaneously. In the early years, the results look incredibly boring. After 1 year, you have put in $600 and maybe you've made a few bucks in profit. You look at your account and think that this is completely pointless, that you should have just bought a new pair of shoes or gone out to dinner with your friends. After 5 years, you're 23 years old, you've put in $3,000 of your own hard-earned money, and your account sits at a few $1,000s. It still doesn't feel life-changing. This is the exact moment where 90% of people quit. They get frustrated, they think the system is rigged, or they decide they want fast cash, so they pull their money out and blow it on something that depreciates to zero within a week. But the people who understand the long game do not quit. They keep that $50 monthly transfer running silently in the background, completely automated, while they go about living their lives, finishing college, starting careers, and navigating their 20s. By the time you hit 30, something fascinating starts to happen. The compound interest engine officially kicks into second gear. The amount of money your investments are generating by themselves every single year starts to surpass the actual $50 you're putting in. Your money is now working harder for you than you are working for it. You aren't just saving cash anymore. You own a piece of the American economic engine. Think about what that actually means. Every time someone buys an iPhone, every time someone orders something on Amazon, every time someone buys a coffee at Starbucks, every time a truck delivers goods across a US highway, a fraction of a cent is moving toward your net worth. You are no longer just a consumer standing in line to give your money away to giant corporations. You are an owner sitting on the other side of the counter collecting the rewards. The real explosion happens in your 40s and 50s. This is where the exponential curve of wealth creation goes completely vertical. Because you started at 18, your money has had decades to compound without being interrupted. A person who starts investing $200 a month at age 35 will have to work radically harder and put in vastly more of their own cash just to try and catch up to the 18-year-old who started with a mere $50. This is because the 35-year-old missed out on the most critical ingredient in the entire formula, the pure, uninterrupted passage of time. Time is the ultimate amplifier. You cannot buy time back, no matter how rich you become later in life. Starting at 18 is a financial cheat code that lets you play the game of life on easy mode. To do this professionally and safely in the United States, you do not need to spend hours analyzing balance sheets or watching financial news networks. In fact, trying to pick individual stocks is one of the fastest ways to lose everything. The absolute gold standard for long-term wealth creation is using broad market index funds, specifically those that track the S&P 500. The S&P 500 is an index of the 500 largest, most stable, and most successful publicly traded companies in America. When you invest in an S&P 500 index fund, you are instantly diversifying your money across tech giants, healthcare leaders, financial institutions, energy companies, and consumer brands. If one company struggles or goes bankrupt, it is automatically kicked out of the index and replaced by a rising, profitable company. The system self-cleans and self-corrects. Over the last century, through world wars, recessions, depressions, pandemics, and political turmoil, the US stock market has historically returned an average of roughly 10% per year over long periods of time. Let's look at exactly what happens to your $50 a month under this historical average. By the time you reach your 50s and 60s, your total out-of-pocket contribution over your entire adult life is just a few tens of thousands of dollars. It's a tiny sum of money spread out over decades. But because of that steady 10% historical average compounding year after year after year, your account balance scales into hundreds of thousands of dollars. The vast majority of the money sitting in your account at the end of the line isn't money you earned at a job. It is pure growth. It is free money generated by the American economic machine while you were sleeping, working, traveling, and living your life. To maximize this strategy in the US, you want to use specific tax-advantaged accounts rather than a standard taxable brokerage account. Setting up a Roth IRA, which stands for Individual Retirement Account, is the absolute best move an 18-year-old can make. With a Roth IRA, you contribute money that has already been taxed from your paycheck. Once that money enters the Roth IRA wrapper, it grows completely tax-free forever. More importantly, when you reach retirement age and decide to pull out your hundreds of thousands of dollars, you do not owe a single solitary penny to the IRS. Every dollar is completely yours to keep. If you leave that money in a regular account, the government will swoop in at the very end and take a massive percentage of your capital gains, wiping out years of growth. The Roth IRA is a legitimate legal tax haven designed specifically to help everyday working people build independent wealth. The psychology of this strategy is just as important as the mechanics. The biggest enemy to your wealth is not market crashes, it is your own emotions. The stock market does not move in a straight line. There will be years where the market drops by 10, 20, or even 30%. These periods are called bear markets or recessions. When a recession hits, the media will scream that the world is ending, the economy is collapsing, and everyone is doomed. You will open your investment app and see that your account balance has dropped. This is the moment where amateur investors panic. They get terrified that they are going to lose everything, so they sell their investments at the absolute bottom, locking in their losses and destroying